Look, some days just start out plain old ugly. And when I say start, I'm talking about the overnight market, the one you can see when you get up early, you watch that ticker underneath the anchors talking on CNBC. All sorts of speculative stocks were just getting clobbered.
Sell, 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 sell.
And it made me think that, well, maybe they take the whole market down with them. Sure enough, they actually did. And we got a hideous opening with tech stocks like the ones we're going to hear from today when we speak to the CEOs of companies attending Dreamforce. Of course, this is that festival of all things tech brought to you by Salesforce.com. Well, they took the biggest hit. And then out of nowhere, Jay Powell, the chairman of the Federal Reserve, spoke about how the economy may need the Fed's help. And the whole market turned up like it always does. But this time it was led by different companies. It was led by the bank stocks. And they are so important to the health of the real economy. I cheered. Unfortunately, later in the day, the president came out with an antagonistic post, yes, on Truth Social, and made it clear that the China talks aren't going well, and that erased a big chunk of the gains. Dow only finishing up 203, but the S&P dipped 0.16%, and the NASDAQ, a lot of tech over there, well, it tumbled 0.76%. Geez, I mean, what a thing we got to go through every day around here. I mean, it's kind of nauseating. Anyway, it turned out, though, let's face it, it was a good day for the real economy and a not-so-hot day for the artificial intelligence economy or revolution or whatever you want to call it. But it's not what dominated the action. And even Salesforce fell 3.6%, an affront to where we are, frankly. No, this move was about anything that we've seen, nothing like we've seen in the last few weeks. When the market roared earlier today, it was all about the non-data center parts of the economy, the Rip Van Winkle economy that's been asleep for ages, frankly. It was about the Fed being worried about the real economy, and Powell made it clear that more cuts were ahead, and he talked about stopping the Fed's endless bond selling. Why do we care about this? Because we've had nonstop selling of the Fed's mortgage bond holdings, and that has helped to keep mortgage rates much higher than they should be.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.